Hello guys, welcome to Bank FB channel. Documented credit or letter of credit (LC) is one of the widely used payment methods in international trade due to its secure and safe nature. Letters of credit are used when there is a lack of trust between exporters and importers, and there are economic or political risks involved in transactions. In this method of payment, banks act as intermediaries and ensure that exporters perform according to the contract and importers pay on time. There are 6 reasons that prove why letter of credit is more important rather than other tools in financing of a trade. Payment security. By issuing a letter of credit, the importer's bank or the collecting bank promises to pay the exporter in the event that the importer does not pay as agreed upon in the sales contract. This is the reason it is considered the most secure method of payment. Letter of credits provide a high level of payment security to buyers and sellers involved in international trade transactions. The seller is guaranteed payment if they comply with the terms of letter of credit, while the buyer is protected from paying for goods that are not delivered as agreed. International trade facilitation. A letter of credit facilitates international trade by reducing the risk associated with payment transactions. It allows parties unfamiliar with each other to establish trust and do business with each other. As a trade finance tool, letters of credit are designed to protect both exporters and importers. They can help you win business with new clients in foreign markets. This means that the exporter gets a guarantee of payment while offering the importer reasonable payment terms. Legal document. A letter of credit is a legal document that is enforceable in court. It provides a clear and concise description of the terms of the transaction and can be used to resolve disputes if they arise. Letters of credit are internationally used and are governed by Uniform Customs and Practice for Documented Credits UCP 600, which the International Chamber of Commerce ICC published. Using the UCP 600 ensures that you do not have to necessarily understand the law of the different jurisdictions involved in using a letter of credit. Financing. Letters of credit can also provide funding to buyers or sellers. Banks may provide financing against a letter of credit as collateral, which can help to facilitate trade transactions and improve cash flow for businesses involved in international trade. A letter of credit (LC) is an undertaking by a buyer's bank, issuing bank, to pay its suppliers for goods or services, subject to agreed conditions. LCs are used extensively in financing of international trade because they offer assurance that both parties will fulfill their obligations in the trade. Compliance with regulations. A fundamental principle underlining the use of a letter of credit (LC) as a means of payment security is that the documents presented under the LC must strictly comply with the requirements of the LC in order for the issuing bank to make payment. Letters of credit are often used to comply with government regulations and trade requirements. They ensure that goods are shipped as agreed and that all necessary documentation is provided. This helps to avoid delays and potential penalties for non-compliance. Standardization. Letters of credit are governed by international rules and standards such as Uniform Customs and Practice for Documented Credit UCP 600, which provides a standardized set of guidelines for letters of credit. This helps to ensure that all parties involved in the transaction understand their obligations and reduces the risk of misunderstandings or errors.